Welcome to another session of What's Up with the Markets. We're going to have a look and see what the market status update is. And this is a fortnightly session that I do. And we track the markets on that basis just to see how it's going. And we're going to have a look at a number of international indices and some commodities and a bunch of breadth of market and sentiment indicators today. But before we do that, I must tell you everything we cover here today is of a general investment advice nature. It's not specific or personal investment advice. And everything we cover here should not be taken in a way that you are going to make any buy or sell decisions from it. It is merely an education session. And what I'll do now is we will swap over into Beyond Charts to have a look at the indices and our analysis, this fortnightly analysis. Right, starting off with the Dow Jones, as I normally do, just looking at the right-hand side of the chart here, I'm not going to spend too much time on it, except to see that we have a downward channel, the black channel lines downward trending. And the first thing we've got to do here or the market's got to do, is it's got to break out of that channel one way or the other. Just the nature of it in terms of retracement. So let's just look on the downside. I've got a Fibonacci retracement here. It has retraced all the way down to a 38.2% retracement, which is pretty healthy for a rising market. But let's just go back and look at the bigger context from back over here, which is in January of 2022 was when the last peak, the all-time high was reached in the Dow Jones. And since then, we are basically excluding dividends, it's in a downtrend. And we know that the uptrend will resume in that time frame from January 2022, when a new high is made, a new all-time high, or when that peak from January 22 is beaten, i.e. the market rises to a higher level than that. So we're in the sideways trending market, sideways moving market, and in a short-term downtrend. And we did, from that trough that was achieved back there in October of last year, 2022, almost a year to the date, we've had a 32% retracement. So in the time frame of a year, this is an uptrend, and we have a 38.2% retracement. In the time frame of just under 2 years, we were in a downtrend. And as you know, the market does move in different time frames all the time, and you can see the primary, secondary movements in this chart. And they are moving within an even bigger time frame, which is a secular time frame, a secular cycle, which in the next 2 to 3 weeks, I'm going to do one of those. It'll be a much longer presentation, and we'll look at a bunch of other indicators as well, not just these more shorter term trend lines and indicators and sentiment and breadth of market analyses. So just giving you a heads up on that, which is, as I said, 2 or 3 weeks time, and I have started preparing on that already. Right, the S&P 500, a similar, the 38.2% retracement is in over here. We found that trough back there. It's bounced off this support zone, the blue triangle. It's still in this upward trend. Now let's just qualify that. I did have to draw a lower channel line here when it broke through this longer term channel that rose out of COVID. So there's the channel, broke below that, formed another channel line here. It's important that when I do this analysis, or you do this analysis, that we try and maintain parallel lines here. So for channel lines, and it's exactly what's happened. So the gradient of this new one I drew here was the same gradient as these over here. And it's just amazing how often this works. And what we did is we found a trough there or thereabouts, and that aligns with these troughs over here. So why do I tell you that? Because that validates this trend line. Now, the technical analysis is not a perfect science. I don't know what is a perfect science on this planet. We haven't found them out yet, but it's close or close enough, and it just that validity gives us some confidence in that trough being found. Now we have this down, the secondary, if you like, bear market within a primary bull market within a secular Well, we'll find out if the secular bull or bear market is still intact, or bull market is still intact when we talk again about that, which I do every 6 months in 2 or 3 weeks' time. Just looking at the S&P 500, the last peak here was the same as the Dow back, or it is a little bit earlier. It is in December, late December of 2021. So still haven't taken out that peak over there. And really the case for the market rising to continue a really bull market type environment would be indicated when that peak, when the market rises above that previous peak, and then we will be into the continuation of it, of the bull market, if you like, that started, well, when I do the secular bull market in a couple of weeks' time, you'll see that it's been going for quite a long time, since April 2013. So in the short term, what needs to happen here? The first indication has been met. We've formed a trough here on the support line. 38.2% retracement has been respected, and for the up case to occur, we need the price to rise out of this channel and make a high, and then form a new peak, which it can only form when the market falls. That peak will be confirmed, and then the next trough after that should form above this trend line, this upper channel line that's trending downwards. You want to see a higher peak and a trough above that, and then another high, and that would be the case for the market continuing to rise. And it would then say, right, the 38.2% retracement, this trough over here is in, and that's where it is. That's where it's going to stay on this particular retracement. And a bit like we saw over here, there's the retracement, then we got the new high, it gets made, market goes to a higher level. So that's what we're looking for the up case, the upside. The downside case is if we fall out the bottom of this channel line and we break below this support zone over here, and the market goes lower. Now, I spoke a little bit about a symmetrical triangle that formed back here. I've taken those lines off, and we fell below that. And you can see another symmetrical triangle forming over here with this lower channel line, the red one, and of the up trending channel, and then the down black over here. And this is forming the apex that I spoke about a bit earlier of the other smaller, shorter time frame symmetrical triangle. So we are forming an apex, meaning let's get excited, something's going to happen. And we have to wait to see if the breakout on this larger symmetrical triangle is to the upside or the downside. Now, I'm not predicting. We don't do that. We just let the price action unfold, and then we react to it. That's what trend followers do, people who follow price action, which we use, which is our language that we speak with the market. The market speaks and communicates to us. So this is probably in the next 2 weeks time, when we do another one of these, we're going to be pretty close to that time if the breakout either to the upside or the downside hasn't occurred at that stage. So let's wait with bated breath to see what happens. Some breadth of market indicators here. We have the blue line is the S&P 500, and the gray line over here is the cumulative new 52-week high, new 52-week low line, cumulative line. So that is still falling, meaning there are more stocks that are making new 52-week lows and highs. And the breadth of market indicator that this is, we want to see that rising. Now, it doesn't rise at a massive gradient when we put it, when we overlay it on a chart of the S&P 500, because the S&P 500 is a more volatile line than the new 52-week, new 52-week high or low. But we can still pick up whether it's rising or falling, and it's still falling. So breadth of market is showing some weakness. And that's confirmed by the cumulative advanced decline line, also on the S&P 500, or this is the New York Stock Exchange, which is 250 stocks. And we do want to confirm, we want to see this rising like that, meaning there's more stocks rising than falling. And at the moment, there's a little bit of an uptick over here, but that trend is still down. We want to break above that trend line, and that would indicate a bit more breadth of market. So that's a little bit weak at the moment as well. The number of stocks in the S&P 500 that are above their, what have we got here, 150-day moving average is below the 50 percentile. That means that more than half are below their 150-day moving average, indicating weakness in the breadth of market. Now let's get on to some sentiment indicators. The US dollar, there is a high correlation, as you've heard me say, and it's an inverse correlation between the US dollar, the basket of 6 currencies that the US dollar is measured against in this particular line. And what line is that? This is the red and green line. That's the US dollar. The blue line is the S&P 500. So we see the S&P 500 falling. We see the US dollar basket rising. And what I've done is this is the relative strength line in the middle over here, which is just a ratio of the two. And this here is a trend following indicator that I put on the relative strength line. And this is saying that the relative strength line is rising in the case of the US dollar, which is actually a little bit of a negative sentiment indicator for stocks, for equities. So this is equities v US dollar. And you'll see when the equities were rising there, US dollar was falling. There's a little bit of weakness in the US dollar over here, starting to it's just fallen below that trend line that I had there, which I've kept in. And that's the S&P 500 starting to rise here. So, but this rising Ciroc over here is telling us that the case is still for the US dollar being stronger than the market, the equities. But I do have a long-term Ciroc on here. I do change that from time to time, and I've left that on for the time being just to get a more medium to longer term measurement on that. So still showing that's the case is against equities there at this stage on what the US dollar is showing us. Strength in the US dollar relative to equities. Right, this is a new sentiment indicator that I brought into this presentation. I know it's going to make the session a little bit longer, but it's also interesting to look at as a sentiment indicator. And this measures the Russell 1000 growth stocks or growth index to the Russell 1000 value index. And of course, when markets are rising and are bullish, then growth stocks tend to outperform value stocks. And I know the value investors have been talking, that when the market starts falling or it starts going sideways, or you see value indices start outperforming growth indices, then they all go, here it goes, it's coming back. Now, the reality of the matter is that for the last 30 years, growth indices have outperformed value indices. And there are times the correlation of the idea is that when value indices start outperforming growth indices, that happens when there's weakness in the market and you get better returns out of value stocks than growth stocks. Now, all the research I've done is that hypothesis doesn't hold up. Growth stocks, and there will be periods of time where value outperforms growth. Otherwise, we'd have a straight line over here. This relative strength line, the one in the middle over here, is a ratio between the two. So this blue line rising is telling you that growth stocks are outperforming value stocks. And you see this blue line rises more often than what it does fall, which means that growth stocks tend to outperform value stocks most of the time. But in market weakness, value does come to the fore in short periods of time. Now, there are a number of growth indices and value indices you can look at. I've chosen the Russell 1000. There's the S&P 500. There's the Dow. There's the NASDAQ. There's a whole bunch of them. But this is the top 1,000 stocks rather than the top 500, which does bring in some mid-cap and a few small-cap stocks as well. So it's one index covering the lot rather than looking at S&P 500, S&P 900, S&P 400, S&P 600, and looking at a whole bunch. So this brings in a lot more stocks and a few small cap stocks at that bottom end, the kind of the 900 to 1,000 by market capitalizations, bringing in some small cap stocks in the US market. So chosen this one as a kind of barometer across all three: small, mid, and large. And what we're seeing here is the buy signal, if you like. Now the one anomaly with this, and it's why you shouldn't put everything into something like this, a sentiment indicator like this, is that both can go down at the same time. So when you've got a ratio, relative strength, measurement, if you like, just dividing one by the other, is that both can be going down, both can be falling in value, but the one's falling by less than the other, which would get this relative strength line to rise. And then when we've got a trend following indicator like the Ciroc on that, is you're going to have both going down, meaning the market's also probably is going to be going down. So the bottom chart over here is the S&P 500, and but the relative strength line is rising, and therefore the Ciroc will be rising. And all that's indicating to you is that growth is falling, but not falling by as much as value, or vice versa. So, but as a sentiment indicator, when growth, if the market's rising or going sideways and growth is outperforming value, that is a risk on signal or sentiment indicator. And again, you can't use this on its own like a lot of the other sentiment indicators that we're going to go through in a moment. But I've added it to the arsenal here just to give another view and to keep an eye on it. So what this is saying, The relative strength line is rising, meaning growth outperforming value. I put a smooth indicator on over here, which is the SIROC, and it's a SIROC of the moving average of the relative strength line, and it just gives us a better view of things, and we can start putting green and red lines on here, vertical lines on here, and it works pretty well most of the time. Again, don't take it on its own. And what it's saying here is this is still a risk-on environment. So that's kind of counteracting the breadth of market indicators that we've looked at a moment. So, and just before. So there's your one sentiment indicator. There's another sentiment indicator where we're measuring consumer discretionary versus consumer staples. And whilst there's a bit of a gentle gradient downtrend, there's a channel over there I put in on the consumer discretionary index. The ratio line is still rising, meaning that that consumer discretionary is outperforming consumer staples at the moment. And this trend following indicator on the relative strength line is showing that the sentiment is net positive using this as a sentiment indicator. So we've got two sentiment indicators saying positive, and we've got one saying negative, which is the US dollar. And you can see the S&P 500 is just to line up these charts over here, the lines is actually falling. It hasn't broken above the upper channel line, which we saw on the S&P 500 chart itself. So this is still saying it's favoring the risk-on environment with consumer discretionary outperforming consumer staples. This is one I introduced at the last session, which I followed for quite some time, and this is the put-call ratio. And effectively, it's a very messy chart up here, and I've got an annual 252-day simple moving average on here, which basically annualizes the put-call ratio, and the gradient becomes quite shallow, or sorry, low volatility. It's quite smooth. And then I've just put a SIROC indicator on that actual moving average. And what we've got over here is effectively when this is rising, it's risk off. So what we're saying over here is it kind of favors the puts. The puts have got the buying of puts is trumping buying of calls at the moment, which investors have when they think the market's going to go down. Now, most of the time, people are on the wrong side of this. So anyway, it's this rising. The SIROC over here is showing that it's a risk-off environment at the moment that is not to be in equity. So there's another counteracting sentiment indicator to the others. And what we're looking for is all of these to be aligned. When all of these are aligned and saying the same thing, that's when we want to really be invested. So at the moment, it's not saying don't be invested, but it's not saying, we've got a raging bull market on our hands. And it's basically confirming the price action. And we look at these as early indications and confirmations and a confirmation of what's happening in the market, or may be what's just be around the corner. Okay, this is another sentiment indicator. This is bonds v stocks, v equities. And this line over here is showing that bonds are rising. And that's why I've got a red line over here. So I've got a relative strength ratio between equities and bonds. That's this line over here, effectively the 10-year treasury note yield as compared to the S&P 500 representing equities. And this rising SIROC over here as a trend following indicator on the relative strength line is showing that it's a risk-off environment because bonds are rising and outperform. Yield in bonds is rising compared to equities. And you can see there's the S&P 500. So that's kind of lining up. As you've heard me say, this is probably one of the most unreliable of the sentiment indicators. But when they're all aligned, then we know we've got a huge risk on market and we can get into equities. So it's kind of half, just in no man's land at the moment, looking across all of those. The VIX indicator is still down in low levels. It's certainly not up where it can get to. So you can see where it gets to. So again, this is also a little bit of a no man's land indication as well. It's not really highly volatile, and it's even favoring the lower volatility. So let's just move into the NASDAQ, the bigger picture first. There's the all-time high back there, and we are in this downward channel. Where did we get to with the Fibonacci? Got to 38.2, or just slightly above it, and are in this down channel. And what we really need is a breakout to above that channel. So there we've got the symmetrical triangle forming as well, the red as the lower and the black downtrending as the higher. And this is indicating that we are coming to an apex. Something's going to happen. The relative strength line against the S&P 500 downtrending, still a little bit of an uptick over here. But when it's risk-on environment, we have this. We have the NASDAQ outperforming the S&P 500 at the moment, slightly underperforming. And this relative strength line over here, which is quite a long-term smoothing, is still showing a risk on. So when you look at the raw price action over a short period of time, the relative strength, underperforming the S&P 500, but a bit of a longer-term smoothing over here. It's saying, hold your hats, don't go and sell out of everything. Something's about to happen. And those of you that have followed your mechanical system, your edge, and are invested, the public portfolio is not 100% invested. I think we've got one vacant position at the moment, and the leverage portfolio has also got vacant positions. And that's just because we don't have enough signals that have occurred to get all of our money in the market in the US. But we are invested. And if the market breaks out to the upside, we set. If it breaks to the downside, we are going to get some exit signals, and we will get out and protect our capital. Sure, we'll be in drawdown, but that's the risk we have to take to be able to profit. Now, the other thing that I haven't mentioned is all three of these markets, the last SPA3 signal on these, mechanical signal, was a sell signal, and we're pretty close to an entry signal. If the NASDAQ composite breaks above this gray line over here, this trailing stop breakout, then that's also going to be risk on. So you can see it's all lining up over here. There's the apex forming, just using subjective technical analysis. There's a downward channel, and that line gets broken. So if we get the breakout above the apex, breakout above the downward channel, and a SPA3 investor signal, and it's pretty close, then you're going to know that this is potentially, not a guaranteed, a breakout to the upside. And then we'll be looking for a breakout above this resistance up here on the NASDAQ and the S&P 500, and probably on the Dow as well. The Dow might be a little bit behind. And then a breakout above this peak. And then the next thing we'll be looking for on the upside is for a new all-time high to get it to rise above the peak that was made in the NASDAQ back in November 2021, coming up for nearly a year. Nearly 2 years. To the case for the downside, very simple. We don't get a breakout there, or we do, and then it falls. Or we get a breakout out down below this channel line, this red upward slanting channel, and we even get a breakout below this downward trending channel, the black one, into a steeper gradient, a downward trending channel. And we would also get a break below the 38.2% retracement of this year-long run-up that's occurred over there. So it'll be pretty obvious which way it's going to go. And in my considered opinion, from an analysis perspective, is this is coming to a head pretty soon. I did say 2 or 3 weeks, a couple of weeks ago, and it's now really getting soon. It's going to be probably 1 to 3 weeks. We're going to have this breakout, and it's going to be, people are going to buy in or sell off, and it's going to be exciting to see what happens. Right, now we can get through some of the other stuff pretty quickly. This is just this is an advanced decline, cumulative new high, new low on the NASDAQ. There are more making new lows. Quite often when this is happening, it can be used as a contrarian indicator. So when this gets really steep, and we look at this compared to the price action saying, hey, it's undecided, this can be contrarian, where people are caught on the wrong side. The NASDAQ 100 cumulative advanced decline line, there's no divergence here. Both falling in value. So the advanced decline line is going down, and the NASDAQ is going down, which is the blue line over there. So no divergence. And surprisingly, on the NASDAQ 100, for the number of stocks that are above the 100-day moving average, is more than 50%. So a little bit of strength there on that breadth of market indicator. Looking at the Philadelphia, the SOX, which is the semiconductor index. It's an industry index, not a sector index, industry group index, that is. And you can see that we just started to tip below. It's fallen to 89.73 on the CIROC measurement, which is the relative strength of the semiconductor index compared to the NASDAQ composite. So it's showing that particular industry group is showing weakness, starting to show weakness relative to the broader NASDAQ. And that's from a breadth of market and even a bit of a sentiment indicator purely on the NASDAQ, that's showing more weakness than strength. So quite a few conflicting indicators here between sentiment and breadth of market. Right, onto, but it's all going to be resolved with a breakout either above or below that symmetrical triangle. And by the way, a symmetrical triangle, as you've heard me say in the past, is a continuation pattern. So it's a continuation of the trend that was coming into that pattern formation. So, you know, and it's not 100% of the time is correct, but it would be saying that the continuation is going to be to the upside. So that's where it's probably favoring at the moment. But the continuation patterns aren't 100%. Don't have 100% correct occurrence. Right, onto the All Ordinaries. The All Ordinaries in a rising market in the US, All Ordinaries underperforms, which it is doing there, and here it's kind of marking time to slightly underperforming the S&P 500. That's what this relative strength ratio over here is showing in the bottom chart. And you can see that the strength is not as strong here on the Australian market as the US markets, or certainly not compared to the NASDAQ and the S&P 500. And wavering right down here at the lower end of this range trading, this sideways moving market, which is marked by the upper resistance area up here and the lower support area over here. But what's happened is it's pretty close to the Spicery Investor breakout, the ATR that we've got over here. There was the sell signal. You can see there's lots of false breakouts and then sells over here, which happens in a sideways moving market for a trend following system. It's pretty normal. You know, trend following indicates trend following. You're out if the trend's down, and you're in if the trend's up. If it's going sideways, you're going to get whipsawed like this. So what we're looking for is a breakout to get a new entry signal here on the index with Spicery Investor, the mechanical system that we have, and then a breakout above this upper channel line over here as well for that case on the upside of the All Ordinaries, or ASX 200 is pretty similar to this, and then a breakout above this resistance line. And then ultimately in the case of the Australian market, it's much closer to its peaks, its past peaks. It's 3 over there that it didn't make, going all the way back to August of 2021. And then in, what is that? That is January of 2022, and then again in April of 2022. So that's what we're looking for. The downside case is that this support over here, which is held 1, 2, probably 3, 4 times, is that support doesn't hold. Breakout below this downward channel line and a breakout below this support zone, and then there would be weakness. And that would happen pretty, roughly the same time as what would happen in the US markets. And there are a lot of pundits out there that are saying that that's what's going to happen. There's, the bear case, if you like, the doomsayers. I'm not going to say whether it's going to do one or the other. Just let's listen and wait for the price action to tell us. Then quickly, just the Australian dollar is really showing weakness. There's a big, long downward trending channel. There was the sell, bit of a breakout over there, sell signal immediately on using our mechanical system on the USVA AUD, and really down at low levels. And if we do see strength in equities, we're probably going to see weakness in US dollar, which will translate into strength into Australian dollar. So we might see this rising. So it's another way of looking at this. If the Australian dollar starts rising, it's a good chance that US equity is going to rise, and then Australian equities will follow. So that's kind of the patterns that all come together there. Right, onto so commodities very quickly. We'll have a look at the CRB index, and that has broken out of the downward trending channel line, and there was weakness here against equities. So I'm comparing this to the S&P 500 and a breakout over there as well. So a little bit more strength coming into commodities, but this is mainly on the back of oil. Gold has trying to show some promise. I haven't changed these trend lines yet. This may, until there's a breakout above this light gray line, this gray channel that I've got over here. This fell almost all the way down to here. I'm going to keep this trend line, the black, in here for a while until we see what happens. So gold is, if the case is that it's going to go, then it's going to break out of this light channel that we've got over here and then go higher. But at this stage, let's see, it's right at a decision point at the moment, and did have a bit of an update on the markets overnight. Silver was pretty much the same as gold. What have we got here with copper in a downtrend at support? So no strength there. This is oil, Brent crude, broke and fell below this pretty narrow upward trending channel, come up to test it. The odds are it's going to fall from there. which, if we've got other weakness in other commodities, then we're going to, and oil is weak as well, we're going to see the CRB index, the commodity index, also fall. Right, on to Bitcoin, a bit of a breakout over here, a big, large bar, followed by an inside day, and there's a breakout. We did talk about this at the last meeting. I use a Ciroc 26.9 over here with the 9-day moving average, I think it is, yep. And sorry, 13-day moving average on the Ciroc line. And this is used for short-term timing on Bitcoin and Ethereum. And you can see there was an entry signal over there. And this is a positive trade so far, just if you had followed the Ciroc on a short-term basis. But Bitcoin is broken out of this downward trending channel as it did over here, and it's rising up to this resistance zone, which was the previous support zone, and it's going to be key to see what it does over here. Will it fall away at resistance at this level, which is just above 30,000, or will it even get there in the first place? The odds are, with the way that we've got higher highs, higher lows here, a big day, which has now become an outside day, to this inside day, which is just a little bit of taking a breather because of that big period of that big green bar or green candle, and it's now having a bit of indecision, and we'll see which way this resolves itself. Typically, when you have inside days like that, based on higher highs and higher lows, the resolution of this is to the upside, but that's not, there's no pattern that has 100% outcome. Ethereum is showing a bit of weakness. It hasn't quite followed through on Bitcoin yet, which is going to be a case against cryptos rising, but of course, Bitcoin is the main game in town. This is uranium. Uranium continues to show strength, change in gradient. As you can see there, it's risen quickly up to that level. We're going to have to wait and see what happens, but this is definitely in an uptrend. Sorry, go the other way. This is definitely in an uptrend, and it's going to meet some resistance over here, a weak resistance point, which is where it's at the moment. I could actually pull that across there and see that it's there. And there's only really 1 point of resistance and a couple of points of, or 1 point of support there. It fell through. So not a strong indication of where this being a resistance zone, but it's one to keep an eye on. And of course, uranium stocks have been much followed and traded in the short-term trading space. Excuse me. This is iron ore, broken out of the downward channel, has poked its nose above this light gray line over here, which I put in as a secondary, if you like, downward trending line. It's there's a lower high over here, sorry, a higher high from there to there, but still lower than that peak over there. So it really does need to break above this resistance and that previous peak, which will obviously take it out of the downward trending channel. So this is a little bit, and I could actually put one of these in, and you can see that there's a bit of a symmetrical triangle forming quite a wide-ranging one, and being weekly data, they typically tend to be wide-ranging. Last one to look at is iron ore, sorry, not iron ore, thermal coal, broke out of the steep downward channel, got to resistance, has fallen from resistance, but this is the first sign you'd have a peak, then a trough should form, and then another go trying to break through that resistance zone, and then going on from there. So a little bit of, in Bitcoin, which is kind of put in the commodity basket at this stage, and in thermal coal and in iron ore, there's a little bit of positivity there, but certainly not a raging uptrend at the moment. So that's where I am at the moment with our analysis. Just to summarize, we'll just go with my summary would be: keep an eye on the breakout above in the S&P 500 has still got a bit of a way to go. You'll see that the apex, just thinking back to the NASDAQ, the apex on the NASDAQ is a lot closer than the NASDAQ on the S&P 500. And typically that's where you would see, a lot of positivity come into those large NASDAQ stocks. That would probably lead. And then we would see if this symmetrical triangle is a breakout to the upside. And when I say lead, either lead to the upside or lead to the downside. So some exciting stuff ahead of us in the next week or two. Right, questions from Claude. Is the Ciroc 26.9 for Bitcoin on a daily or weekly chart? That's on a daily chart, Claude, daily chart. We can just go there and go to BT. So that's a daily chart. There's a day over there. Yep. And I remind you, you can download all of this analysis into your instance of Beyond Charts and get it and look at it, and then you can save it into your own personal and modify it accordingly. Okay, what is your view on lithium stocks, in particular PLS? Right, I haven't looked at lithium stocks much, but let's just go and Pilbara. Okay, so this is my old analysis on Pilbara. So what would I do here? All these Fibonacci's are no longer relevant. Let's just get some lines off here. And where would I put this? Effectively, this is how I do my analysis on this. Go to favorites, go to rectangle blue, and right. So there's the first thing. So this is at a key resistance support area over here. It becomes pretty obvious. What are we trying to do here? We're trying to just use analysis, just simple support resistance, trend lines, and the like to put some order on the chart, to take this chaos of just price action and red lines and bars and everything all over the place. And you can see that this is in a sideways trending market. It's at the bottom of a range and at support. If you're a short-term trader, you could try and trade this range with a reversion to mean type environment. I've got an ATR on here, which is just one that I eyeballed, and I've got some settings. Now remember, this ATR is very different to the one that we have SPA3 Investor. This only has one up and down setting for all of the stocks history, whereas our one, the one that we use in SPA3 Investor, has different categories of volatility and different up and down settings per category of volatility. So, but it's still not too bad. So I would say this, if this is an indication of what's happening with lithium, it's in a sideways trending market, a breakout. This is a big continuation pattern over here based on, if you like, this long-term uptrend. And nothing really to write home over here from a rising market. If you want to short-term trade this, you might pick this support area and then take it up to, and then trade, then ride it all the way up to see if there's a breakout, but sell it on the way somewhere near the top, the upper end of this sideways moving zone here. So my view on lithium stocks, I've got a group, I've got a whole bunch of watch lists set up for different commodities, but I'm not doing that at the moment. It's not the kind of type of market to do that. You've got to beware of these sideways moving markets, is where people become a bit, bored's probably the wrong word, impatience probably the better word, and they're wanting to put money onto, they wanted to get the equity curve to go up in an environment where little pockets move here and there. And of course, when the market's going sideways to down, those pockets become very narrow. There's very few of them. But this is where you might hear people talking about overtrading, and and impatience causes that. Of course, there's many ways you can approach the market and what we do as SPA3 Investor, being a medium to longer term methodology, is that we just ride out these periods. But if you're trying to force your equity curve to go up and go look for the pockets where there might be a bit of action going on at any given time, and just be careful you don't become one of those, those bees, if you like, flying around looking for the honeypot somewhere. Typically, when you're having to do that to try and generate profits, you end up not doing well. That's where speculation and impatience and all the other negative things about what happens to people losing money happens, right? You want to wait for the sun, the moon, and the stars to be lined up, but be prepared and ready for when that does happen. While you're waiting for that to happen, sure, there's going to be some false breakouts and things like that, and a bit of sideways move and a bit of a drawdown. But we want to be ready in the main game, not just these little bits of pocket around the place. So I'm just saying that as a word of caution. It doesn't look to me like lithium is a place to be at the moment. I know that there are other pockets out there, but it's a pretty time-intensive, highly analyzed, and high analysis type environment. And to align your psychology with that analysis, you tend to put too much importance on analysis and not enough on mindset and psychology when you're trying to chase pockets of the market. And unless you've got your psychology aligned with your analysis, most people lose. We know that something between 70 and 90% of people lose trying to do that. So it's a tough gig. So rather be patient and wait for the main game in town to happen. Right. Any other questions? Right. We'll end it there. Been going nearly 40 minutes. Thank you for your time. watch that symmetrical triangle, watch the support zone, watch the upper trend, the upper channel lines, and let's see which way, and the lower channel line, and let's see which way this market breaks out.